Hey, what is going on, my friends, and welcome back to another video on the channel. Well, in today's video, of course, we're going to be taking a quick look at XRP. We're finally getting some structure here, and you guys do know once we get some structure, we can then start to get an idea of where we see breakouts, breakout targets, price predictions, and much more. So, of course, let's go ahead and let's do that. So, what we can see right now is that we're starting to see a symmetrical triangle forming. Of course, eventually we will either see a breakout to the upside or a breakout to the downside. Well, we'll talk about both case scenarios. I never like to say it's going to do this, even if I have my own opinions and I have my own thoughts. Of course, I never want to say 100% is going to do this because I don't want to give you any type of false sense of security one way or another. And so what we see whenever we see the formation of these triangles is they're not just random, okay? And now let me show you what I mean when I say they're not just random. So what we're going to do is draw a Fibonacci from the swing low to our swing high. If we go ahead and draw that fib there, boom, boom, we can see that it creates our 618 to 786, our key retracement zone, right here. So that's when the price goes up, it comes down, and then starts to retrace back off of this zone because that's a major zone of support. Well, from there, what we can see is that if all we do is then go from this swing high down to that swing low, we then interact with the zone on the other side. So instead of going swing low to swing high and then coming down, we're going swing high to swing low and going up. Well, then we go up, find some resistance in that same zone, that 618 retracement zone, and then start to come back down. And so with that, it creates this type of squeeze. We start to see us bouncing in between 618s and 786 zones. And as we keep doing that, it creates something of a triangle. So that's how we get here, okay? It's not just a random thing that the price does, it creates these triangles. No, it's a squeeze, okay? And so now let's talk about what we can expect, what this thing can look like, and then what my price predictions are one way or another. So of course we want to see a breakout to the upside. That's optimal, right? So if we do go ahead and we just draw again that swing low or swing high to swing low, again, we need to pay close attention to this level right here. Boom. Now this level is going to be $1.28. So if we are going to see a breakout to the upside, if we're going to see this thing go out this way, there is still a chance that we reach resistance that is coming off of that 786, which is our key retracement area, and then it causes a throwback back into the apex, which is generally followed by a breakout to the opposite side. So if we were to see again, like maybe a fallout this way, if we were to find support and work our way back in, that's typically grounds to see a breakout to the upside. And so if we are to see a breakout to the upside, we don't want to get too excited again until we clear $1.28. That means we've then cleared our retracement zone coming off of this swing high to this swing low, which is generally going to act as enough support to rocket fuel, of course, to start to test some of these Fibonacci extensions. So of course, if we do see a breakout here, we go out to the upside. Don't start throwing in all your money because you're freaking out and thinking everything is just going to be perfect and it's about to explode. Give it a second. In my honest, non-financial advisor opinion, allow it to clear that $1.28 to see that we can break through this support or this resistance region. Aren't going to see a throwback, and then that's whenever that is a great buying opportunity there. Of course, that's the upside. Now, if we do see a breakout towards the downside, we need to look at this in perspective of where it may go as well. Well, of course, in order to do that, what I would do personally is I would draw a Fibonacci from this swing low back up to our swing high. And it's a very similar thing. If we are going to see a breakout of this triangle to the downside, what I'm looking to see happen is that although we may break out, there's still a chance that we find support here, whether it be on this 100 EMA as it moves in, or whether we find support on the 618 to 786 to the downside, and I would then be hoping and looking to see that we can re-enter into the apex to then see a breakout to the upside. So what we're looking to see happen, if you do see a breakout there, it's not, don't freak out, don't panic. Just look to see, okay, can we hold support on the 100 EMA on the 4 hour? Can we hold support at $1 exactly, which is no surprise. Of course, that's such an important level. It's no surprise that it's such an important Fibonacci retracement level. Can we hold support at $1 if we do revisit that? And then if not, of course, if we start to clear $1, I'll make a video as soon as I possibly can. So of course, if we do see this thing starting to break out to the downside, look for $1 and look for that 100 EMA. We lose that $1, I still think we would interact with the 200 EMA on the 4 hour, and I would be very surprised if we don't bounce off of it. Now, of course, if we do lose all of these levels, there are further downside projections, but those are the three most important levels to the downside that we need to look to see if we can hold support and then use that support to re-enter into the apex to try to find a breakout to the upside and, of course, clear $1.28. Now, one way or another, whether or not this does happen, what we do need to pay attention to, though, is that if this does break out to the downside and we start to interact with this 100 EMA on the 4-hour time frame, that could be a sign that momentum is starting to slow down. And let me show you what I mean. Look at how, as we did work our way up within this massive run up here, we never really interacted with the 100 EMA once we caught steam. Like, once we really got going, we didn't really interact with it that many times. We would go to our 50, we would extend all the way back up, we would see a fantastic movement. We would come back down to our 20, let's get that, come down to our 20, up, and it would just go on and on and on. But that moment that we lost that 50 and we finally started touching and interacting with that 100 EMA, that was a sign that we were looking at maybe a little more consolidation or a little bit of time of a cool down. And it goes for pretty much all of these runs we had. This is another great example. So we came up, we're working our way up, going to our 50, back to our 20, to our 50, and we start to kind of squeeze, but right here, we interacted with that 100, and it was a sign that we were looking at maybe a little time of consolidation, okay? So if we do break out to the downside, do look to see, okay, if we start to interact with this 100 EMA on the 4-hour, that could be a sign that we are going to see that cool down, which of course could be a good time to take profits if you're short-term trading this thing, as probably that big exponential curve that we've been seeing maybe starting to falter a bit, or it may be a good time to say, all right, probably a good time for me to get my cash ready, as I'm probably going to start buying and increasing my position in this area of consolidation. Now, I want you to realize, though, that this is okay. If we see this, it's 100% a-okay, because realistically, those things are needed. If you look at our RSI on the daily, we're still very close to overbought territory. We want to see that this thing can cool down and then have all of this room up here to work if we do fall. That's okay, because if we have this area of consolidation, that gives us that momentum. It gives us that space to see another big move to set some new all-time highs. Because remember, we want to be right within, we want to be within here in overbought territory, where we may be overbought right now, and we may see this RSI come back down and cool off for a little while, but we're giving it that room to go back in and set that high. We don't necessarily want to be right here, where we're going to see some type of movement. We're in overbought territory on the RSI, and sure, we may get one big leg up, sure. But from there, it comes with a big crash back down because we're putting so much pressure on the RSI. We're stuck in overbought territory, and there's not enough room to work. I'd be okay with that. So if we do see a breakout to the downside, don't be afraid of it. That's an okay thing because it gives us that room for the long term to be able to see that continued growth to the upside. Because realistically, if we do go out to the weeklies, one thing we can see is that these things still have loads of room to work. I mean, simply just look at our MACD. Look at the MACD and look where it's at. We're just crossing into this bullish territory. We're just printing some of these green candles. We're just printing some of these green bars. If we can look at a movement such as this, we're just getting started. And so if we do see a pullback right here, still in the long term, we're looking very good right now. And that can still allow us to see much more of a climb to the upside as we have seen happen in the past. And going forward, that can definitely be beneficial to see that cool down. So don't be afraid of it. Don't be afraid of it at all if that is what's going on. But of course, only time will tell. I can't read I don't have a crystal ball. I can't read into the future and I can't tell you what's going to happen. But what we can do is look at these charts, look at these different trend lines, look at these different breakout targets, and start to make these different estimates on where we think this thing may go and use that to dictate what we do next. And that's what we're going to continue to do. So of course, if you are looking to see this thing go to the upside, when of course it does break out, be looking for it to clear $1.28. If we're able to do that, I think we're looking probably at $1.52 XRP. I still think that's very possible. And of course, if we do see this thing break out to the downside, look for an interaction with our 100 EMA on the 4-hour, as well as that big swing low to swing high Fibonacci retracement level at $1 right here, as well as then our 200 EMA on the 4-hour as well. So that's the important levels. That's what I'm looking for. That's what I'm watching to see happen very closely. Of course, if you guys did enjoy today's video, if you like just staying up to date on what these levels are, what I'm looking for, my expectations, and more, of course, you can let me know by commenting down below and smashing that like button if you are new. Now, I will let you know if you are still here that, I know we're a little bit later into the video here, but I do have a Patreon. I don't really talk about it in every single video anymore like I used to, but of course, in this Patreon, I go over my trades, I go over my portfolio, everything I'm buying, what I'm looking at, and you get early access to these videos everything like that. So go down to the link in the description and go check it out if you would be interested. But of course, with that being said, I will update you guys as soon as we do see something important happen for XRP. So definitely stay tuned, and I can't wait to see you all next time. Peace.